Rockwell Automation shares down here after the company saw higher earnings and sales in the fourth quarter and issued a fiscal 2023 growth forecast. Let's bring in Rockwell Automation Chairman and CEO Blake Moret for more on this. Blake, always good to see you. Top of your earnings release, you note that organic sales in the fourth quarter up 20.5%. That's a very big gain against a backdrop of a slowing economy. Where are those sales coming from?
So we saw great sales in the fourth quarter. It was broad-based. We serve a wide variety of industrial markets, from automotive, which had a very good quarter, semiconductor, as we're participating in the build-out of capacity there, oil and gas, renewable energy with solar energy, food and beverage, pharmaceutical. So really broad-based across the spectrum.
With that kind of broad-based results that you have seen, where do you kind of look across the business and really identify where there is perhaps even still cost management that needs to take place at this point in time?
Well, productivity is always a part of what we're doing, even in a time like this when we're seeing double-digit growth. We saw, as you said, double-digit growth in the last fiscal year, particularly strong in the fourth quarter. And as we go forward into our fiscal year 23, double-digit growth again, with strong earnings growth as well. Productivity for us and for our customers always remains in style. A big part of our value proposition is increased efficiency in all of these industries, as well as helping them launch new lines of business. And we look inward and look for ways to be efficient ourselves.
Blake, I'm trying to figure out why your shares are down, frankly. And I don't know if it was the midpoint of the profit forecast, maybe being a little light of what analysts were predicting, but I also see your free cash flow was lower than some of the folks on the street were predicting at about $358 million. Can you talk to us about your cash position and how you guys are spending and or saving right now?
Sure. We're traditionally a very strong converter of free cash flow. And one of the things that we see in an environment like this is an increase in our inventory, particularly components, work in process, as we're managing through the supply chain constraints, bringing in largely semiconductor chips. They're arriving at different times. And so we're making sure that we're bringing in that inventory so that when that last chip arrives, then we're able to get products out the door and improve the customer service and reduce lead times to customers. The downside of that is that higher inventory is reflected in higher working capital, which has a negative impact on free cash flow.
Blake, I mentioned before your organic sales in the fourth quarter you just completed up 20.5%, but your outlook for the next 12 months, you see organic sales up 9% to 13%. How has this current quarter started?
Current quarter has started in line with our expectations. So our quarter began October 1, and so far the quarter in terms of orders and shipments is developing in line with expectations. I want to also mention, in an environment like this, there's continued volatility. While we expect a gradual improvement in the supply chain and specifically around semiconductor availability for the types of node technologies that we use, we still believe a conservative approach is appropriate as we introduce guide for the year.
I'm also curious about whether a conservative approach is warranted on things like headcount. I noticed in the statement you talked about that you're committed to investing in attracting and retaining key talent. How are you thinking about workforce and headcount right now? Are you sort of holding the line on numbers, but still focused on getting the best people in there? How does that work?
Well, we always focus on getting the best people
Sure.
in, and obviously making sure that we're an attractive destination for talent in all ways. And compensation is certainly a part of that. Increased amounts of equity as a part of total rewards, and all the other things that make Rockwell a great place to work. And with a continued low unemployment, then we recognize that talent, especially in some of the most high demand jobs, have a lot of choices. And it's a fundamental part of our culture to consider all the other choices that an employee, like a customer, can go, and to make sure that we match up really well.
Blake, good to see you. Blake Moret is Rockwell Automation CEO. Thanks so much.
Thank you.